Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, Bank of Ghana ends 2025 with international reserves reaching a record $13.8 billion. But to what extent could the stronger reserve position influence Ghana's sovereign credit ratings and borrowing costs in the near term? We shall be finding out. Also in this bulletin, Commissioner General of the Ghana Revenue Authority visits supermarkets and shops in Accra to ascertain reduction in prices of goods as a result of the new VAT system.
The price is still the same, and you have taken out the COVID levy, and then the levies are also now calculated on the base with the same as VAT. That automatically should lead to a lower price.
The levy part will come down, sir.
We have details of these and more lined up for you. Please stay on. Glad you could make time to join us. I am Pius Kojobaka, and looking at our stories. The Bank of Ghana ended 2025 with international reserves reaching a record level of $13.8 billion. Joy Business has learned this from sources with knowledge of the country's reserve position. We have more for you in this report.
Sources say the Bank of Ghana could have ended 2025 with a higher international reserves of $14.2 billion if it had not been the recent Eurobond payment made in December last year. We understand that government revenue numbers picked up strongly in the last quarter of 2025, resulting in the Ministry of Finance moving to make this $709 million Eurobond payment in December ahead of schedule. The development resulted in the reduction in Bank of Ghana's international reserves to $13.8 billion ending December 2025. We are also learning that the Gold Board made some payments to the Bank of Ghana, another development that impacted on these strong reserves. This should mean that for the year 2025, the Bank of Ghana added $5 billion to its reserves, a development that can be described as record. The strong growth in Bank of Ghana's international reserves has been influenced by the strong reserve accumulation program as well as Bank of Ghana sticking to its domestic gold purchase program. For some, this record reserve buildup could go a long way to firmly stabilize the Ghana cedi even for this year. Now, this is because it could put the Bank of Ghana in a strong position to support the Ghana cedi for the first quarter of this year. The local currency usually comes under some pressure in the first quarter of every year. The development could also go a long way to check dollar demand because it could assure the market that the Bank of Ghana is in a strong position to support the Ghana cedi. It could also go a long way to impact on Ghana's credit ratings in the coming months.
All right, so let's make meanings out of these figures as we have it. Joining us via Zoom to do that is Associate Professor at Andrews Universities in the USA, Williams Prepara. Thank you so much, sir, for agreeing to speak to us on Business Live, and good to see you. Now, how do you assess the quality of the Bank of Ghana's reserve build-up in 2025? Was it driven by sustainable inflows or short-term measures, you think?
Good evening to you, Becca, and good evening to your viewers. If you ask me as whether this is sustainable or short-term, I'll put it as a mix. First, we know we are under an IMF program, which, because we are meeting all the set targets, there are some inflows coming in, which has helped our balance of payment. And then also, the government itself has benefited from a lot of trade activities, which is exports. The first one, which we all know, which is the gold trade activities, has really gone up. Our cocoa has also brought in a lot of inflows. Remember, these two commodities are seasonality in nature. They are cyclical. Their prices can go up or down. At the moment, we have seen that the prices of cocoa and gold has gone up. The government itself has come up with probably from the previous government, have structured the previous gold for reserves and gold for oil program under gold ball, which is also bringing a positive impact. So it is too early for us to say this is sustainable. We need to wait and see what happens when IMF exits, their program ends, and see if the government will be disciplined, maybe within 2026, and also see what happens in 2027. When we talk of sustainability, it's a long-term approach. So this just happened within a 10-month period. So we have to wait and see what happens.
All right. So for you, what do you think will be the impact of these reserves basically on investor confidence and Ghana's attractiveness to portfolio and direct investors?
I mean, so for investors, there's something we call trade risks. Most investors are now certain that if they invest in Ghana, let's say in Ghana bond market, and they want to repatriate their money back into their country, yes, Ghana government will have forex to be able to support that. So that investors' confidence is really, really there. And for manufacturers, also those who want to do direct investment under FDIs, the positive signal is there. Now it's very easy for manufacturers, mining and service industry to be able to get a forex to be able to do their trading. Importantly, if they want to import raw materials to support production in Ghana. So this is a good thing. The confidence will be very high for the government, and that is why the fact of the things that's why we are seeing a lot of probably investors are now looking at Ghana, and they are hoping that the government will focus on this strategy to ensure that there are more forex for them to be able to do their trading.
Professor Prepra, largely, to what extent would you say the stronger reserve position influence Ghana's sovereign credit ratings and borrowing costs in the near term?
So, for the rating agencies, what they look out for is that will Ghana have the money to pay their debt? In terms of having that money, they look at our balance of payment account, and our reserves is now showing that's the figure of 13 billion. So that confidence is there. The outlook looks positive and stronger. So I am thinking that if they want to really assess us again, currently most of them put us around BB minus rating. They will maintain that rating maybe in the next quarter and see what really happens. But it's a positive signal. They now are certain that Ghana, the risks that we experienced is being lowered now because we have a lot of forex to be able to make payments. In terms of borrowing costs, the moment your risk reduces, your cost of funds also reduces. So we anticipate that cost of funds will have to come down. Locally, you've seen it that inflation rate is dropping, and as inflation is dropping, your cost of funds or cost of money also comes down. So you see that the treasury bill rate has also dropped significantly comparing last year to this year. So these are the signs, the positive signs you see. And all these will lead to the sovereign rating agencies giving us a higher rating. One important element, we noticed that the finance minister paid, I think in December, did not wait for maturity of one of the loans to be due, the Euro bonds. He paid earlier before. So when you are able to do such transaction, it really strengthens the confidence to tell investors that you are not going to default on your debt, and that will really lower the risks and the cost to really come down.
Great. Let's flip the coin now. Are there any risks that could quickly erode the reserves position, and what indicators should the market closely watch in 2026?
I mean, yes, to every coin there are two sides. The first risk that we have to watch out for, at the moment, Ghana is enjoying from high prices in cocoa and gold. if these commodity prices reverse, it's really going to affect our country. So our country managers may have to think about what strategy, what should we, anything can happen in a global market. And then also we have to watch, now that the city has become very strong, it helps to increase imports. So we must also have to watch what we are importing into the country. The more we import, the more we have to pay money out to wherever we import from. And this is going to, if we don't watch it, it's going to weaken our current account. It probably at the moment it's positive, but if you import more, it will increase and put it in deficit, and this is going to worsen the situation.
All right.
The other side is that we should be mindful of making sure that fiscal spillage in terms of government expenditure and revenue generation, we don't deviate, especially the budget for 2026. If there's any deviation, it's really going to have an impact on the forex, and all the gains are going to be eroded. The last part, which probably we may not have control, is what happens in the global market, any shock. So we may have to really work on transforming our economy and making sure that, yes, if there are any shocks like it happened in the past, COVID or anything, war or any other thing, we have really built a buffer and be able to survive. So these are the things that we have to look out for, so that we, in the next 2 years, if something should happen, we'll be able to go through it.
Great. Thank you so much, Professor Williams-Prepra, for your time speaking to us on Business Live. Now, remittance inflows from the United Kingdom to Ghana have declined to 17.5% of total receipts, down from about 28% during the same period in 2024, triggering renewed efforts by the Bank of Ghana to channel diaspora funds into long-term productive investments. Governor of the Bank of Ghana, Dr. Johnson Isiama, disclosed this at the London Accra Economic Growth Summit, noting that while the UK remains one of Ghana's most critical remittance corridors, the decline highlights the need for more structured and incentive-driven engagement with diaspora. More in this report.
According to the Bank of Ghana, remittances from the UK between January and September last year fell significantly compared with the previous year, despite their continued importance to Ghana's foreign exchange inflows and macroeconomic stability. Dr. Johnson Isiama explained that diaspora remittances have traditionally supported household consumption and strengthened the balance of payment. However, he stressed that the central bank's policy focus is shifting beyond consumption toward investment that can drive sustainable economic growth.
Colleagues, remittances constitute a structurally important and counter-cyclical source of foreign exchange for Ghana, with the Ghanaian diaspora in the United Kingdom representing a major remittance corridor. In the period between January and September last year, remittance inflows from the UK accounted for about 17.5% of total remittance receipts into the country. This proportion, however, marks a decline when you compare it to the same period in 2024, when the UK corridor contributed about 28%, which was equivalent to more than a quarter of all total inflows.
British High Commissioner to Ghana, Christian Rook, stressed the importance of such partnerships.
Taking a bit of a step back, the UK and Ghana share a strong, long and enduring partnership. And at the heart of this partnership is a shared ambition for economic transformation. It's a shared ambition for increasing trade. It's a shared ambition to increase investment and to strive towards inclusive growth.
As part of effort to reverse the decline and scale up inflows from the UK, the Bank of Ghana is exploring diaspora bonds, collective investment schemes, and other capital market instruments that would allow Ghanaians abroad to invest in the economy through transparent and well-regulated platforms.
This is still Business Life. We have more for you after this break. Hello again, welcome back to Business Live. A team of officials from the Ghana Revenue Authority has visited some shops and supermarkets in Accra to assess the implementation of the new VAT system, which commenced on January 1, 2026. During the visit, the managements of Melcom, Palace Mall and other supermarkets confirmed that the implementation of the new VAT has resulted in reduction of prices. More in this report.
The Commissioner General of the Ghana Revenue Authority, Anthony Kwesi Sarpong, together with a team of senior GRA officials, has begun a monitoring exercise to assess the implementation of the reduced VAT rate and the cancellation of the COVID-19 levy. The team interacted with shop owners, many of whom confirmed that the new VAT rate has taken effect. The exercise started at Palace Mall, where the account manager confirmed that businesses are already charging the revised VAT rate. At the Melcom Mall, management welcomed the GRA team and explained that the implementation process is progressing smoothly.
The price is still the same, and you have taken out the COVID levy, and then the levies are also now calculated on the base with the same as VAT. That automatically should lead to a lower price.
The levy part will come down, sir.
So
that will come.
Has been done.
Yes, sir. So 1.9% has come down.
Yeah, okay. So that is what we are looking at. We are looking at the VAT.
Yeah.
What percentage has come down?
It is 1.9.
1.9% has come down. Yeah, that's what we are talking about.
Yeah,
Okay.
sure.
We just look at the tax component to be sure that at least it has listened. And you are confirming that it has reduced by 1.9 because of the listen. That's very important.
The Commissioner for Domestic Taxes, Dr. Martin Yamborija, also engaged customers during the visit, examining their receipts to ensure the correct VAT rates were being applied.
No, I've not seen any COVID.
You have not seen COVID?
Yes.
So what are the taxes? I mean, what are the taxes that you can see?
VAT is 15%.
Okay.
And then Gene Found is 2.5%. And then NHIL, which is also 2.5%. Yeah.
And they are all calculated on the same base value. Okay. So what it means is that you have gotten a reduction in terms of the amount that you have listened. So are the savings for you. So as a result of the removal of the COVID levy and then the integration of the levies into the VAT, prices have automatically reduced by 1.9%, and that is your benefit.
Addressing the public, Commissioner General Anthony Kwesi Sarpong urged consumers to always demand VAT receipts whenever they make purchases, stressing that this will help them fully benefit from the reduced VAT rate.
We continue to appeal to businesses and individuals who are business owners that we would like you to go on voluntary compliance. Comply with VAT, charge VAT, implement VAT on your systems, or issue VAT invoice as the case may be. And for all consumers, as you are enjoying the new reforms, also demand your VAT invoice anytime you purchase. When we work responsibly as businesses and we also act responsibly as consumers, together we will raise the needed revenue that is needed to develop the nation.
Some shop owners and customers expressed excitement about the new tax measures and commended the GRA and government for implementing the VAT reduction and removing the COVID-19 levy.
Some oil marketing companies have moved to reduce prices of petroleum products at the pumps again. This is in addition to earlier price reduction last week by some other oil firms. We have more in this report for you.
Star Oil, which took the lead last week by dropping the price of petrol to 10 cedis 86 pesos and diesel to 11 cedis 96 pesos, has now moved to these new levels. However, the prices are based on Star Oil's discounted pricing policy for some of its service stations across the country. The second major oil player in the industry, that is Gulf, has also announced a reduction in its prices at the pumps. Diesel at the various service stations across the country is going for 11 cedis 96 pesos, whilst petrol is selling at 10 Ghana cedis 99 pesos. Other major oil marketing companies have told Joy Business that they will respond to this competition by also moving again to reduce their prices at the pumps. Some of the oil marketing companies have told Joy Business that this reduction was influenced by the cedi's sharp appreciation against the US dollar. Some of them have told us that if the local currency's performance is even sustained for this month, then we could witness another drop in prices at the pumps from the 16th of January 2026.
And you can always get stories when you log on to myjoyonline.com/business. There you go on our portal. Let's Get some quick read. New VAT system. Melcom Palace Mall confirmed reduction in prices due to reform. And you saw that story here on Business Live. Also, that portal, UK remittance share to Ghana drops to 17.5% as BoG eyes diaspora investment push. We also brought you that story here on Business Live. Effective resource planning crucial for sustained economic recovery in 2026. That's according to Deloitte speaking there. Also on that portal, you see ease the tax burden. Business owners call for duty cuts to boost local enterprises. We have more stories when you log on to myjoyonline.com/business. I am Pius Kojobaka. Let's connect at 8 p.m. with Prime Business.